Anand Tandon joins us, Chief Executive Officer with JRG Securities. Anand, good morning and thank you for joining us. Anand, the Nifty is down more than 100 points in 2 days and we've lost more than 2% this week. So based on this week's price action, are you getting a sense that markets are in a mood to consolidate and this rally has run out of steam?
Well, I think the answer to both is, the first one is yes, and the second one is a bit mixed because, the momentum seems to be on the way up, and we've had a very large rally. It has reached a new high, and after that, it's not surprising that we are seeing a couple of days of down move. But, yesterday's data both from Europe and US were pointing in opposite direction. So on the one hand, you had a cut in interest rate, on the other hand, you are getting better figures, which again have raised the bogey of whether or not the tightening will start, well, not tightening, but the reduction in purchases will start anytime soon. So at this stage, I don't know whether there is a clear direction to the market. I think it's near its top as far as the index goes, so it's unlikely that it will rally very much from here. But it could still continue to, maybe up between another 3-4% up or down.
Anand, cyclical stocks may have corrected yesterday. They had a weak, Tuesday as well. But in general, cyclical stocks across the board are up more than 20 to 25% from the recent low. So what explains the recent fervor in cyclicals? Speculative froth or hopes of recovery?
Well, I think, the frontline stocks had moved up way too much. The valuation gap was very high. Secondly, the assumption being made now is that, we will eventually get the cycle down in terms of the interest rate. If not today, then maybe in 3 months or 6 months from now. And therefore, given the valuation gap, the likely uptick may happen more in cyclicals than in the defensives or the, steady growth companies. Clearly companies like FMCG, etc. are way too expensive to explain any kind of growth, justifying those kind of valuations. Therefore, you had to look at cyclicals. But the question here is that going forward, with, as you mentioned, 25, in some cases, maybe 40% growth on the bottom, is there still some juice in cyclicals? I think it is going to become a lot tougher.
Anand, it's the rupee which seems to be getting problematic yet again. So, do you think Infi will stand to be a winner, and as would be the case with not just Tech Mahindra, but the rest of the IT pack as well? And what would be your top 3 picks from that space?
I think IT and anything to do with exports will continue to remain, buoyed by tailwinds. There is no question that I think the rupee will depreciate maybe another 5 to 7% from here over the next 12 months. Whether it happens tomorrow or it happens in a year from now, I am not in a position to say. But clearly, the emergency effect of what the government has done in terms of trying to reduce current accounts has paid off, and we have seen some money flow coming in both because of RBI action, as well as because of the fact that there has been a forced reduction in imports. But until and unless we get a real uptick in the economy and we start looking at doing better on some of the export front, as well as doing some import replacement, I don't think that the CAD has really been sorted at a fundamental level. We have sorted it out at a technical level as it were. And therefore, I think, rupee will continue to remain under pressure over the medium term, especially given the inflation differential we have. Therefore, anything to do with exports continues to remain good. And at this stage, maybe again the absolute top-line companies in IT have done reasonably well and are continuing to do well. But it may be time to look at, some of the not-so-large companies as well. And you mentioned Infosys. I think Infosys continues to remain quite strong. So does Tech Mahindra, so does perhaps Mindtree, Persistent Systems. I mean, there are a whole variety of companies out there, perhaps even Wipro at some stage.
So Anand, which is a better stock to buy? Tata Motors, which is a global play, or Tata Steel, which is a domestic play?
Because if you are really looking for, near-term performance, I think Tata Steel has possibly greater bang for the buck for the simple reason that, Tata Motors has been in everybody's portfolio for a while now, and it is a story of continued growth, whereas Tata Steel is possibly a case of a turnaround in the international population.
Anand, fear really has been the constant feature of this year's price action. First it was Europe, then it was tapering, followed by rupee, and then earnings. So do you think till the time there is pessimism in this market will keep on going up?
Well, that's the usual theory, right? That, you actually do well when the market is a little nervous. And when the complacency sets in, that's when the market peaks out. But, I don't know whether the market is very nervous, considering that we are at its near-term high. And, to my mind, again, the index stocks are actually, for the most part, more than fairly valued. So, there are really two markets here. And the one that we all watch closely is the one that is, I think, more than fully priced. The rest of the market was what was providing the interest in the near term. But as I mentioned a while back, given that, there's been very strong performance there in the near term, I think there may be some give up there as well. So at this moment, I'd be a little cautious overall.
Some other names which are going to be fairly active today, and Just Dial is one such case in point. It's been added to the MSCI small cap index. Just Dial in yesterday's session as well held out by nearly 1.5%. Anand, do you like this one?
Well, right now, I think most internet or mobile-based businesses are attractive from the point of view of the fact that there are very few out there. And therefore, if you want to try and take a consumer play based on the internet stroke mobile space, then, you need to buy some of those. But if you look at almost any parameter of valuation, I think they are way expensive compared to any kind of business growth that they are likely to witness in the near term, or even in the medium to longer term. They have to actually pull out a few rabbits from the hat, get into a few other businesses rather than just what they're doing, in my view, to justify the kind of valuations that they're showing.
So Anand, give me one stock where you're ready to bet your kitchen sink.
Because that's always a difficult one, because I'm a strong believer in, in ensuring that you hedge your bet. So I don't think you can really, bet everything on one area. As I said, the areas that one should be looking at are really those which have some export angle. And if you're looking for a delta movement, then, metals perhaps and capital goods are two sectors which are definitely still showing some problems.
What about banks? Do you think what we saw in the last couple of trading sessions was just some bit of froth which is now easing out, or has something really on ground changed for PSUs as well as the private banking lot?
In my view, banks are not going to be the leaders or even the front runners in the next move up. Largely because of the fact that they are grossly overowned except for the PSU banks. And PSU banks will take a long time to run through their NPA issue. So I think, the valuation again are a big dichotomy there. Private sector is way over the top. Public sector is cheap, but with good reason. And I think, you have to remember that at the end of the day, the banking sector does well only because there is lack of other sectors to do. Because here you have a guarantee that you won't, the bank can't go under. But once the other sectors start to do well, they will have a far greater bang for the buck than the banking sector will have. So if you're really betting on a recovery, you should be looking at cyclical rather than.
So are you expecting disappointing performance from SBI? Again, it's slated to come out with its earnings next week.
SBI is a difficult one to judge because, again, we have a new chairman there, so we have to wait to see how the accounting changes under the new chairman. Every time there is a change in the top management, there is a new way to look at NPA. But, clearly I don't expect to see a big uptake in terms of their performance, given the fact that, they are the biggest bellwether for what the broad economy is doing. And I don't see that there is enough uptake in the broad economy to merit major positive growth from it.
So Anand, if I look at the sequence of events, tapering adjustment was the big story in the month of September. Earnings surprise was the big trend in the month of October. What could be the big trend for November and December?
Tapering again could be one, right? I mean, at the end of the day, if the jobless claims continue to fall or show more than one downtake as we've seen recently, there would be a pressure to try and ensure that you start cutting back there. So that's clearly one of them. I think the US action in terms of their own economy continues to be a bit of a problem with their political situation as it is. I think going forward, as we go closer to our own election, that will become a major driver in terms of sentiment. I'm not saying it will make any change in terms of earnings or corporate performance, but at least in terms of the outlook to the market, I think people will start factoring that in even more than they are currently. And I think that will bring in some caution as well.
So Anand, based on the recent price action in FMCG, and especially names like ITC and United Spirits, is the springtime in FMCG over? Because now the quality end of the FMCG is correcting. ITC, United Spirits.
So I think, will they continue to grow? I think yes. Will they continue are they overpriced in terms of the valuation? I think answer is yes again. So, as other less valued companies start to do better, I would imagine money will shift from, FMCG, which has been a kind of safe haven approach, to something which is a little more aggressive in terms of saying that, you could do some bottom fishing turnaround company. So from here on, incremental flow is very unlikely in FMCG, and I think incremental outflow is more than likely. Does it mean that this companies will do badly? Not so badly, because of course they will not do as well as they've been in the past if inflation comes under control. But they do have a steady growth rate, which tends to accentuate when the rest of the company's growth rates fall, and which tends to underplay itself when the rest of them grow faster.
Anand, really appreciate you taking the time out and chatting with us today.